What's going on, everybody? My name is Zach Hartley and welcome back to another Watchlist video. I've got a lot to share with you this week, starting with the economic conditions and the market conditions that are currently happening. We've got a lot to talk about there. Then we're going to do an update on one of my favorite companies that I've pointed out several times on this watch list. It is now skyrocketing. And then after that, I'm going to share with you some of the upcoming trades on my watch list going into the week ahead. So let's jump right in. Okay, so starting things off with the market conditions, this is what the NASDAQ looks like right now. We did break out of previous all-time highs, but we have had a little bit of a pullback. We started trading below our 50-day moving average. However, in the last kind of week to 2 weeks here, we have seen a nice rebound. So the NASDAQ is now kind of retesting all-time highs, and it is looking fairly strong. It looks like this was just sort of a healthy pullback, at least so far. When it comes to the S&P 500, sort of a similar pattern here. We started trading below our moving averages. We have now crossed back above our moving averages, and things are starting to look positive. It looks like it was just a healthy pullback again. And then the Dow Jones, again, similar pattern, a much larger breakout from our previous all-time highs. A little bit of a pullback, kind of trading sideways over the last 2 weeks. When it comes to the VIX, you can see that pullback on the chart here as the VIX actually skyrocketed while the market was selling off. So again, just confirmation of telling us and showing us exactly what we think we're seeing. When the market is pulling back, the VIX is going up, and that is exactly what happened. We use the VIX just to give us some confirmation of what we think we're seeing in the actual stock market and in some of these indices. When it comes to cryptocurrency, Bitcoin hit its high back in March, and for 2 months now, it hasn't really done a whole lot. It's basically been trading in a bearish direction. It continues to get rejected around 72,500, 73,000. Currently trading at 64,000 after a great 48 hours, but still below our moving average. So something to keep an eye on. If you are interested in getting started in cryptocurrency, I personally use Newton. They will give you a free $25 when you deposit and trade $100 or more. The link is in the description down below. When it comes to oil and gas, we had a nice beautiful run up from December to about April of this year, and then for the last month we have now crossed below all of our moving averages and we are trading in the bearish direction. It looks like we might have some support around $76, $78 here, but we're just gonna have to wait and see. Now, 2 commodities that I had my eye on recently, one was uranium. It skyrocketed from like $50 to $110, but for the last 2 months has been trading sideways, so I'm not sure if I'm going to keep following this one super closely. And then we also have lithium. Lithium has basically been cut down by about 80%, and now for all of 2024 has been trading sideways. I think it's going to go back up, but I don't want to buy in and invest into it until I start to see that upwards trajectory. Then I plan on buying Albemarle. It is a company that is consolidating along support right now. It is not in this watch list, but I have talked about it before. Coming up this week, we have a lot of earnings. We're basically in the middle of earnings week right now. We got Palantir, Walt Disney, Rivian, Uber, Shopify, ARM, Robinhood, Roblox, Marathon, and Enbridge all reporting this week. So it is a big week for earnings. Lots of companies that I like to keep an eye on. And when it comes to market conditions, the big news from last week was that the US Fed chose to hold rates steady primarily because inflation is starting to flatten out above our target rate of 2%. We wanted to see inflation come right down to 2%. It's basically come down to between 3 and 4% and has started to level out. That is not what the Fed wanted to see. They want to consistently keep interest rates high until we hit 2%. Now, because of that, it feels like interest rates keep getting pushed back. If you had talked to somebody in December of last year and said, when do you think we're going to see interest rates being cut? They probably would have said, we expect to have seen a cut by now. And now that we are in this position, it looks like it's still a few months away. And so interest rates are higher for longer. That is the sentiment in the market. And I don't think they're going to come down drastically when they do start coming down. All of this that we just talked about continues to put more stress on the banks. You can see the regional banks in the United States are really struggling right now. Some of them are even collapsing, and anybody else that has a high debt load that is variable is going to be struggling because they probably were not anticipating this high of interest rates. And so there are a lot of companies that were not prepared for this and are really starting to just run out of money now. A lot of real estate companies are also starting to come in this boat, or the value of their assets has declined significantly because they're not as full and the building costs more. And so you've got kind of a double whammy there. When it comes to the broader economics, layoffs continue to happen amongst a variety of different companies. Tesla just announced they were laying off their entire supercharging team. Google has announced some layoffs. A lot of companies are announcing layoffs right now, and it doesn't feel like there's a huge hiring spree happening in the United States, at least for those high-end jobs. Crypto markets, like we showed, also starting to weaken a little bit. We've got some interest that is struggling right now. We've got a lot of the altcoins that are starting to struggle a little bit. Bitcoin has kind of leveled off and gone into a bit of a bearish trend here, so lots to watch for in the crypto space. Okay, now when it comes to stocks, this is a company that I pointed out to you in my last watch list video. I've also talked about it probably 5, 6, 7 times before that. It was Brookfield Renewable. This is from a little while ago, kind of middle of April here. I love this company. I think they're going to do extremely well long term. I like the dividend, I like the business model, I like management, I like the strategy. I like everything about this company. This is the chart that I showed you a few weeks ago. This is what the chart looks like today. We broke down below 30. We got to 29.54. We bounced off of support. We broke out of our previous levels of resistance, or our previous resistance trend here. We crossed above our moving averages, and now we are up by like 30% from basically when I pointed this out. I also took a trade in here, and my position is up about 20% right now. I got in a little bit late because I was busy that week, but things are going extremely well with Brookfield Renewables. I also don't think it's too late. I think this is just the beginning. I plan to add to my position. I think this company is going to do extremely well long term. Next company that I'm watching this week, basically for a short-term trade, because I don't like the company long-term. I'm not a huge fan of it, but it is just hard to ignore this pattern. Look at Zoom Video Communications over the last basically almost a year and a half to 2 years. Like, it's pretty crazy. We've bounced off $60 here 4 different times right now. We're starting to bounce off it again. I am looking for just a short-term trade, basically between $60 and maybe $72, $73 in here, just for a quick bounce. I'm not a huge fan of the company, but I do like the technical analysis right now. Next one here is Tencent. I mentioned before that I like Tencent and Alibaba. I think the worst of it might be over for China. If you agree with that statement, then Tencent and Baba are places you may want to put your money. Tencent has just broken out of a very long-term and strong bearish trend here. They've also broken out of previous resistance, and they're starting to move higher with some decent volume. Alibaba is a very similar pattern here. They're breaking out of the long-term bearish trend. They're breaking out of consolidation. They're breaking out of previous highs. They're trading above their moving average. They have some good volume here. And if the worst is over for China, these two companies are well positioned for a great rebound. I really like them. Last one here is Amazon. Amazon makes up a key holding of my current portfolio. I plan to add to it. I like Amazon. I think they're only going to grow and expand over the next 10, 20 years. As you can see though, they are approaching a very serious level of resistance at their all-time highs. They have already been rejected 3 times, and I'm expecting a breakthrough. If we see that breakthrough, I plan to add to my position. Now, if you're interested in learning any more about this or actually doing this for yourself, I have all of my knowledge, all of my content, and all of my courses available on Skillshare. The first level you need to start with is called Stock Market Fundamentals. You have 1 free month to go through and take the entire course for free. Over 21,000 people have already done it. There's over 400 reviews for you to take a read through, and over 2.7 million minutes have been spent watching that course. I promise you it'll be the best free resource that you can find online. And thank you so much for watching this video. Good luck trading, good luck investing, and we'll talk to you soon.